flavor for your ear. Epic Spotlight. Putting the spotlight on positive goings on the real people that have chosen a real path. The who's, the whys, and the hows are being shared.
And we're back. We got another one. But before we get going, we first got to take care of some housekeeping notes. This episode today is sponsored by Epic Mortgage. Whether you're buying, refinancing, or investing, call Epic today. That's 708-905-5300. That's 708-905-5300. It's your dreams, your goals. Let's plan together. Now on with the show. Today we got the spotlight on Juan Pardo. He's a CPA and expert in accounting services for real estate investors. Juan helps clients navigate the complexities of their finances with precision and clarity. As a real estate investor himself, he understands the unique challenges of the market and ensures reports are easy to understand, helping you analyze what works and what needs attention. His deep industry knowledge and ability to collaborate effectively set him apart, giving you a clear financial picture for informed decision-making. Juan is bilingual, CPA with over 20 years of experience. He holds an MBA with International Business and a Bachelor of Science in Hospitality Management from FIU. Originally from Venezuela, Juan has lived in Florida for nearly 30 years and currently resides in Orlando with his family. In his free time, he enjoys running, playing tennis, and spending time outdoors. And welcome, Juan.
Thanks, Dante. Thanks for the intro.
No, I appreciate you. Hey, let's get into it. So as far as real estate investing, how did you get into real estate investing?
Okay, when I graduated in Miami many years ago, one of my professors recommended me to a job doing asset management for a developer. And I knew so little that when the first time I heard Homestead, I thought that was the properties that were down in Homestead, Miami. That's how little I knew about that.
Sure.
But it got my interest, and the beauty is that I combined the real estate portion of it with the asset management that involves some knowledge in accounting, etc. And that's why I started combining both of my passions, because I am passionate about accounting. I know it's for those out there that don't understand, you can create a lot of passion for accounting. I really love it, and I love real estate as well. And that was about 24 years ago, because that's when my son was, my wife was pregnant with my son. So he's 23. So that was 24 years ago that I started getting involved, and the rest is history. I just stayed with it. So.
No, that's great. I mean, obviously, real estate investing is one of the, products that we offer. We try to help people get into investing in real estate. We see the value in it. And, but you do have to have a passion for it. You have to enjoy just the ups and downs and the trials and tribulations of real estate. Now, obviously, this might be a simple question, but let's just nip it in the bud. As far as accounting goes, why do you feel like accounting is so important in real estate?
Accounting is important in my world, in any business, but in real estate in particular. And we break real estate in, let's say, in two different tiers, right? We have the rentals, and we have the people that buy and rehab and flip, the flippers. Mm-hmm. Accounting is so important because what I've noticed is that a lot of investors are very good at finding the houses, doing the marketing, and getting everything. But once they get it, they don't have a clear breakdown of their projection. They're very good at doing projections before they buy it. Somehow they know their numbers before they buy it. But once they buy it, somehow they don't follow through. So what I've noticed in the past with some of my clients is that when I put those numbers into perspective, then we find issues. We say, well, when you first did the projection, you were going to make, let's say, 30%. But when you were halfway down the projections, I noticed that you were already at break even. So something happened there, whether it's the contractor, whether they overpaid, whether the market value was less than they expected. It doesn't matter what it is, but we have to know the why. And if they got better, then we also have to know why, because, if you do that much better, then you might be missing on opportunities. So it could go both ways. So to me, if you don't put, when I say accounting, I mean, the whole journey of accounting, like the bookkeeping, the finance, the lending, the whole thing. If you don't understand that from the beginning, there's a saying you probably heard a lot of times: you make money when you buy the property, not when you sell it, right? So you
Hmm.
need to know your numbers before you get into that investment. So accounting is the tool that can help you keep track of what you expected to get after the deal is, finished. Hopefully that made some sense
It
for the
does. It does. No, I was thinking in my head when you were saying that, it's just like, obviously, what are some financial challenges that people, real estate investors in particular, face? What are some of the things that, like you were referencing, what would you say?
One of the main things that I've noticed is that the people that are very dedicated in investment, they need to understand the biggest line item for real estate investors, besides the rehab and the whole building on it, is marketing. Marketing is huge. And what I've noticed that the typical pattern is that there's not a set way to know which marketing is giving you how much. So that's what I like to work with them a lot. It's like, okay, let's forget about accounting for a little bit and let's find out. I mean, what do you do? Google Ads, you did Facebook, you did cold calling, you did mail campaigns. What did you do? And how can we figure out which ones of them are bringing you? Because believe it or not, sometimes it doesn't matter how much money you make on the property itself. If you're overspending in the marketing side, all that profit is going to get sucked out of it
Sure.
from the marketing side. And unfortunately, we're talking about millions of dollars at any given time. So there's always money going in and out of the bank accounts, right? That's why accounting, again, is important. I like to break bank accounts as needed. I mean, even if it takes us 5 or 10 bank accounts to do it, we need to know what property has how much money at any given time. So if we dump everything into one and we don't separate by project, we might think that, like the saying goes, you're paying Peter with Paul's money type of thing.
Right.
So going back to your question, I think marketing is one of the biggest ones that people need to analyze. I think that's one of their biggest challenges because there's not a set, you throw out there. So we need to strategize. How do we know Google was the one that brought you the most, or how much are you spending on it? And once you get to that point, then you can, spend more here, less here, until you get to that sweet spot that you know that your marketing money is making you more money. That's one of the biggest challenges I encounter for the ones that are consistently investing, because then we have the investor that has their job and does it on the side, and it's only one or two, and when the opportunity arises, then they don't have that marketing. But the ones that are consistently doing, and you know who I'm talking about, the ones that are
Right.
cold calling all day long and mail campaigns all day long and postcards and websites and the whole thing, you need to be very careful on the marketing side.
Yeah. It's obviously from a real estate investing world, you can do short-term rentals, you can do the buy and holds, you can do the fix and flip. But at the end of the day, you still need a renter, you need a buyer. And what you're talking about with that marketing is to go get that end user that's going to use that property. If you have a short-term rental, well, that means that person may only be there for a week. You still have 20, 25 days within the month to try to market it and get more tenants to know that this is the house to hang out at. Here's a great place. Here's the location and why you would want to be. And sometimes, I know some of the websites, allow you to market, but none of that's for free. I mean, everything will come at a cost.
Yeah, Airbnbs are very expensive because you have the management fee, then you have the split, and then you have depending on the management company, sometimes the cleaning and all that goes, to one person or the other. That's why when they do Airbnb, what happens with investors sometimes, depending on the quality of the investor as well, because if the investor is a doctor that got a few Airbnbs, that person doesn't really want to get too involved, so they hire, But you really need to understand where all the money is going to be broken down to find out at least your break even. Like if you're in it for the money, you need to know your break even. You need to know out of the 30 days in a month, how many days you need to rent that Airbnb to at least, cover the expenses. So that's, again, accounting. That's when, because when I put the numbers in my system in the accounting side, that's when I figure out, what's going on the management side, what's going on the rental side. And then I combine it because most management companies are involved in the rental and some expenses like cleaning, for example, right? Cleaning and maintenance and things like that. But when we throw in mortgage, taxes, insurance, Mark, all other stuff that's when, you see the whole picture in one piece of paper. And that's when you get the aha moment. Either it goes very good or you need to, make some changes.
Yeah, we've had issues with some investors, obviously, that had a number in their head, but they didn't really factor in the taxes and the insurance, the whole PITI mortgage payment, and then we get close to the end, and they're like, "Wait, I'm not making what I thought I would be making on this." The average rent in the area may only be $2,000, and now my mortgage payment's 1,800. Am I in it for $200? And then they have to kind of think about, and we got to look at the benefits, right? I mean, is it about the cash flow or is it about tax deductions? And so most people initially, I feel like they're in it for the cash flow. They want to supplement the income, or they want to quit their job and make this their prime income. Is that kind of what you see for the most part?
Yes, and I like asking them because everybody has a different thought. For example, right? My sister, if she does one of these things, because sometimes we start talking and she sees things completely different. And she goes, "Oh, as long as I rent it and somebody else pays my mortgage, 30 years from now, I have a house." That is somebody that sees things like, I'll put a little bit of money, get the loan, and let the renter pay all the expenses. I don't expect anything from it. So she's not doing it as a business. But that's a valid point that she
It
has.
is.
I'll put 20, 30, 40, $50,000 down. I'll sit down, and in the next 15, 20 years, I'll have some equity. And eventually, I don't know, my daughters will have a free and clear house, for example. You have the other investor that is looking at, okay, I want a 10%, I want a 15%, I want a 20% return on my investment. Those are the ones that are looking, to make money on the investment that they're putting in. So the way I see it is, without getting too technical about accounting, taxes, finances, what is it that you expect from your investment, right? If you expect A and you're getting B, then there's a miscommunication there. We need to go ahead and try to figure out why that's happening. But if you're getting what, a lot of people from Latin America and other countries, they just want to get their money out of there, put it here, and have, say they have some sort of investment in the United States. Even if they lose money, they take it to that degree of like, oh, at least my money is in a real estate in the United States. That's another way of seeing things. But when you put it in the system, in the accounting system, at least you know what you're getting, whether it was with your expectations or not. At least you can make a decision based on that. And that's why I push so much that if you're an investor, make sure that you have some sort of report that tells you you're standing on a monthly basis to see if you're accomplishing your goals. Because if your goals is just break even and you're breaking even, you accomplish your goals. But if your goals is 20% return on investment and you're making 5, then you are not accomplishing your goals. Let's see what happened. Either you bought too expensive, you're renting too low, which happens a lot. So a lot of people bought like 5 years ago, and the rents are still at that mindset, right? And but nowadays is a different story. I don't know if that I don't know if did that answer your question, or did I
It
get
did.
completely
It
out of
did. Yeah, no, it did. I mean, like you said, it starts with defining your goals. What are you trying to accomplish? And like you said, because I know a gentleman that bought some townhomes, and his goal was that he was going to take whatever he received to pay the mortgage. And even if there was excess, he was just going to pay off the mortgage because he just wanted to have, 3 to 5 properties free and clear in the next 20 to 30 years. That's all he cared about. Because at that time, with appreciation, he could sell them, and doesn't have to, he doesn't owe anything, or it's 100% cash flow at the time. But some other people, their initial goal is cash flow. I need cash flow right now. How much am I making? What's my spread, right? If I can get $2,500 in rent, and my mortgage is only, 1,500, I'm making $1,000 a month. Okay, now let me go get 5 of those, and now I got, $60,000 gross coming in. So I mean, it is a difference, and people have to be aware of what is your goal up front. Now, when you're talking to your clients and working these out, are you creating a ledger, or are you showing them different, financial tools to look at different ways to kind of look at their investment, or how are you making it easier for them to understand?
I love that question because I completely changed in the last few years and now, because I used to do tax planning, tax preparation. I was very involved on the tax side plus the accounting side. So my mind was always like the terminology, the accounts, where they supposed to go, and the whole thing to mimic the tax returns, etc. But then I noticed that when you talk like that to your clients, they they don't really want to look at the report because they don't understand it, right? So if they go a lot to Home Depot, I wouldn't mind calling an account the Home Depot account instead of calling it the materials or the supplies account, because that's how they identify where most of their money is going out. So one of the things that I like to do is first, every single one of my clients have a variation of my master chart of account. Chart of account is just to start with that. I don't know if your audience,
Mm-mm.
chart of account is the accounts that you see in the balance sheet and in the income statement, right?
Mhm.
So that's the master. Those are all the accounts, and usually their assets and their liabilities and their income expenses. But before, I used to be very tax oriented. Everything had a number and the whole thing. Now I try to mimic their life. What is it that where they're spending the money, and I classify it in those chunks. So every one of my clients have a different one. If I see that they're doing a lot of marketing expenses, I change that marketing to call it marketing dash Google, marketing dash Facebook, marketing dash cold calling. I start breaking it down because that's when they talk to me. That's how they talk to me. Oh yeah, that was a cold caller, or that was the mail campaign. So when we analyze, we can just analyze everything in one view.
Mhm.
So what I like to do when I do this is I like to get to know them, and then I like to apply the accounting so they can enjoy when they're reading it, understand what's going on. And it sounds simple, but it is huge. It makes all the difference in the world. Now my clients are like, when we talk, they can engage in the conversation. They know what's going on. I can give you, right, for example, the mailing campaign. We can
Mhm.
tell that's very expensive. I don't know if some of your clients invest in mailers. That's very expensive. So if you don't track the how much you're making out of that, you can go belly up really quick, right? Cold calling, the same thing. So when you put it that way, they engage, they look at it, and they look at the number in the first page. So it gets their attention. Let me put it that way. The same thing goes with everything that I do. I try to understand how their lingo is, how they talk, how they analyze things, and we put it in paper. And then we talk about it and we make decisions, we make changes, etc. So it's
Got it.
and by the way, I'm not trying to like nothing that we would do is, I mean, the tax preparer, that's one thing, that's one of my things. When I get a client, I tell them, I want to, I'm open to meet with your tax preparer, I don't know if they have like a life coach. Nowadays, there's a lot of coaches for a lot of things. So I
Sure.
tell them, if I were you, I mean, we're all in your team. Grab your bookkeeper, your CFO, your tax preparer, your tax planner, your coach or wife, whoever is in your side, and at least once every quarter, let's get together because everybody's going to be pulling to their specialty. But at the end of the day, we should all be pushing to your goal, right? So since I understand a little bit about everything, I like those meetings because then I can go ahead and make better improvements on their books so the tax guy can go ahead and make better decisions on the tax planning, tax strategy, tax saving, etc.
I,
So
I I love that because we talk about that financial team. Obviously from a mortgage broker perspective, I'm trying to be on a client's financial team. And, that's one of our goals is to, hey, let me be on your team. But to be on your team, we have to have communication. It
mhm.
can't be just here for the next 30 days and then I don't ever talk to you. You got to be able to call me and tell me when life changes, because that's when we have to analyze and see if there's a benefit, if there's any way I can help you. If I don't know that life is changing, I can't use my resources to, best suit you for your dreams and your goals. Or if goals change, I need to be aware of that so we can make those same type of changes too. So having you on the financial team, being that bookkeeper, helping them keep everything, kind of uniform. So when it's tax time that they can actually file their taxes, that's tremendous. That's awesome.
Yeah, I do believe. Like the other day, we went into a meeting, a whole bunch of accountants, right? And one of the girls said, "Oh, what should I call myself, right? Should I call myself just a bookkeeper?" And I said, "That's the terminology that a lot of people think, oh, it's just a bookkeeper." But let me tell you something. A good bookkeeper is as important as your best tax guy, your best CFO, or your best anything. And I'm not saying because now I am completely passionate about bookkeeping because it frees my mind to be. The word creative it sounds bad when you're talking about
Sure.
finance, but it opens my mind to say, okay, how do you view things? Let's put them like that so you can make better decisions. Then the tax guy, I'll talk to him how to combine it to make it on the line that he needs. But the point I was trying to make is that you can have the best tax preparer, the best tax planner, the best CFO, the best strategies, the best everything. And if you don't have a good set of books, they will not be able to make any recommendation or decision
Sure.
because they're going to base their recommendation on the books they're reading or
Correct.
on the numbers they're reading. So it is beyond important to take it from the beginning, And the more I do it, the more I realize because my clients when I show it to them, even the ones that have been doing this for many years, there's an aha moment. They're like, oh shit,
Right.
is that really my number? And I go, yeah. And we have all the transactions to back it up. And somehow when they see it in paper, that's when they go, oh, okay, I know exactly what happened that time. And let's go ahead and fix it. So yeah, bookkeeping is definitely one of the if you want to use a real estate term, is you can have the best roof in the world, but if your foundation is
Right.
cracking, it don't mean anything.
Correct. Correct. So, hey, take me into Florida right now, just as a real estate investor. What are some of the trends? What are some of the stuff that you're seeing in Florida right now?
Florida, the biggest thing I see now is that, oh my God, I don't know. There's always a market in Florida. A lot of people come and they buy, like Miami. It's all over the place. Tampa is big. Every time like many years ago, I said, "What? I'm not going to pay $500,000 for something that now is going for like close to $1 million." I mean, it's a little bit surreal in a way.
Sure.
And you know how it is. I love Florida. I love the weather in Florida. I love the humidity, the heat, and the whole thing. I've been here most of my life. But people come from all over the United States, and we don't pay state tax. So
Right.
shoot, I don't know why anybody would not be in about it. But in a way, what happens is the prices do get jacked up. And three things are happening with new buyers that it's not even so much the price of the house, but when the price goes up, for example, in your world, then the mortgage goes up.
Right.
Right? When the mortgage goes up, then also not because of the mortgage, but because of the house goes up, the real estate taxes go up. And then you know that the insurance is definitely going to go up.
Sure.
Shoot, the insurance goes up, even the house doesn't go up. I mean, that goes up every single year. So now, when you say, "Oh, the house was 300 a few years ago, and now it's 500," it's not that just the house is 500 and you need to pay more in mortgage, which now the interest rates are a little higher. It's the taxes and insurance that I think is the biggest hit, especially insurance, because sometimes they don't even want to get insurance. The interest, I know it's gone high, but if you go back enough years, what is it, 7%
Eight,
now?
actually. Well,
Eight,
yeah. I mean, just
eight.
overall, the last 50 years, the average rate is 8%. So it's still historically low.
Yeah, I mean, if you think about it, I mean, when we were at two, come on, we got
Of
very
course.
spoiled at that. I mean, I know some of your listeners are gonna, not be too happy about this, but it's true. I mean, it is
True.
true. I mean, anything between 5 and 7 was what we always were used to getting paid. The thing is that if you add that increase with the 50 to 100% increase in the property itself, now it kind of like skyrockets.
Yeah.
So Florida is all over the place. Everywhere is expensive now in most places, but then again, everything is perspective and comparison, right? You go to New York, California, even in Florida. If you go to Miami and then you go to Orlando, there's a
It's a
big difference.
difference. Yeah.
And then you go from Orlando to Jacksonville. and then you see another difference with Jacksonville is a little bit less expensive. So there are still places that you can manage, but it's like everything.
The name of the game in real estate is still finding the deal. Finding that good deal. There's still people that are distressed and have to leave and have to sell, and there's obviously an older community, obviously in Florida, a lot of retirees that might be moving on, and so therefore there might be opportunities still in obviously Florida. I mean, when you say that, I mean there's still great opportunities if you can
Yeah,
find the right deal.
there's always going to be an opportunity anywhere in the world. There's always a need for something. There's always an offer that satisfies somebody. The timing and all that plays into effect. Here in Florida, well, I guess in the whole United States, you mentioned it, the elderly. I mean, we definitely need to do something. I mean, there's a market right there, and you probably I can't remember the name of the company there. They're very known for that. The ones that they rent per room. That's a
Mm,
great a thought process, because somebody with fixed income is not going to be able to go out and call you and say, hey Dante, I get $1,500 Social Security a month and I want a $300,000 house or 200. You just won't cut it. I mean,
right.
so renting by the room is something that before it was Airbnb was like a big boom. I noticed that it's starting to, I don't know if you've noticed that too,
A
starting
little
to
bit.
slow
Yeah.
down a little bit.
Yeah.
And now the community houses or rent by the room is what's, picking up, and completely agree with it, by the way, because if
Makes
I'm
sense.
makes getting Social Security and I only get $1,500 to $2,000 a month, I can't afford a $2,000 mortgage because how do I eat type of thing, right?
Correct.
So, but real estate, that's what's so interesting about real estate is that, every time there's a need, there's some way of making it happen, right? And you mentioned last time that you have some mortgage products that are, beyond, I think, from back in the 2009 and 10s, like I mean, whoever has the money is going to be able to go ahead, at least have the opportunity to buy a house. Because that's the other thing. Because I have some clients that call me and they say, I need to prepare my books and the whole thing for the
For the
and
mortgage. Yeah.
they have the money, they make money,
Right.
but somehow they don't have the 2 or 3 years or whatever is it that the lender asks, and then they get stuck with the money, so they have to wait an extra year type of thing.
Yeah,
So
I think overall, just right around the pandemic, which was 4 years ago, really we started to see an opening on investors for some odd, kind of strange reason. You don't really know why the market goes where it goes, but they really opened the door for people that had money and had credit and had that opportunity. So, we really do a lot of loans that are based on just the cash flow of the property. We're not really looking at person's quote unquote tax returns. And that really has been an opening up for a lot of self-employed people that, they do hair or they do Uber or they do whatever. And, they want to get into real estate investing, and, they're used to taking risks. They're not risk adverse. And so that type of product that we offer has been huge. And we've closed several deals down in Florida, in Daytona Beach area,
mhm.
in Lakeland, kind of Central Florida areas where we've seen opportunities and we've taken advantage. So, yeah, it's definitely some more products and programs that are out there now for real estate investors. If you have credit and you have the money, definitely a huge opportunity for you to, if you want to jump in, we can definitely help for
Yeah, yeah,
sure.
absolutely.
Well, hey, this has been a great conversation. You have really enlightened just ideas of bookkeeping, how important it is as far as real estate investors go. Really appreciate you coming on the show today, and definitely want you to have an epic day.
You too, man. Thank you for everything, and we'll be in touch.
Take care.
The who's, the whys, and the hows are being shared and given to you. Epic Spotlight, baby. A new flavor.